Hey, thanks, Sam. And thanks to all of you for tuning in today. We're going to talk about two different proposed rules from the Consumer Financial Protection Bureau that came out in proposed form on August 10th. One of them is a set of amendments to Reg Z, and the other is a set of amendments to Regulation X. These respond by changes made by the Dodd-Frank Act to RESPA and the Truth in Lending Act, and the scope of these proposals is amazingly broad in terms of all the different facets, and these are lengthy, detailed, and complex. It took me 4 huge ring binders or spiral binders to get them all, so there's a lot to learn, and we're going to cover everything from what the difference is between a notice of error versus a qualified written request, what you have to do in terms of responding to requests and errors and providing information, what you have to do in terms of having policies and procedures for information management. You know, when you look at the laundry list that's on page 1 of the materials, you can draw a line directly back to issues that have appeared in the press, from people saying, well, I couldn't get my payoff statement on my mortgage, or I had made a payment and it wasn't applied correctly, or I tried to get the servicer to consider me for a loan modification program and I never did hear. I didn't know if I was going to be approved or not. So the new RESPA rules deal with everything from the error resolution to the continuity of contact among your personnel dealing with borrowers. And the Truth in Lending rules touch on everything from a new requirement for periodic statements on residential mortgage loans to early warnings on adjustments that are coming up on a consumer's adjustable rate mortgage, and there are prompt crediting requirements for mortgage payments, and they get into depth about things like, okay, what if the borrower makes a partial payment? What then? So this is all a product of the Consumer Financial Protection Bureau. Their website is shown on page 2. And Jack, start us off just laying the groundwork on RESPA.
Okay. Well, the rules do involve both Truth in Lending and RESPA, and here we give you the background on RESPA. You know, it's the Real Estate Settlement Procedures Act, it's Reg X, and then we got the commentary. You know, Mary Beth, you look for small things to get excited about in this mess of stuff that we got, and, you know, this first time we've had real commentary for Reg X. You know, in the past, there's always loose interpretations or
newsletters,
frequently asked questions or whatever. We got a real commentary now, and so that's the start of something good, I believe. So we have all that information. Over on the next page, we talk about, just give you some numbers, the RESPA proposal. As Mary Beth explained, there were 2 proposals, one to RESPA, one to Reg Z. They each deal with servicing, but different aspects of servicing. The RESPA proposal came out on August 10th, 249 pages. Comment period ends on October 9th, and final rules are expected in January. When you look at Truth in Lending, also came out on August 10th, 177 pages. Same comment expiration date, October 9th. Once again, regs are expected in January. You know, looking ahead at all the stuff that's coming, Mary Beth and I were chatting before we began the program, just trying to think, okay, what's left? What have they not done proposals on? And, you know, all this stuff's going to start become final soon. You know, we're expecting the first final rules in October, more in late November or maybe early December, and then in January. We're going to get these 2 and a ton of other regs dropped on us in final form. So, you know, we've been dealing with this, gearing up for this whole massive Dodd-Frank change thing for 2 years now. And now it's really happening. I mean, you get the proposals, but it's not final regs yet. But, folks, there is so much stuff coming. if you're not getting a handle on these proposals as they come out, when all the final stuff hits, even though it's not all going to happen at one time, it's going to be so much in such a concentrated period of time, you'll be overwhelmed. So we're glad you're along with us for this ride today to start trying to figure out what we're dealing with here. Mary Beth, over on page 5, we have a few definitions.
One of the key definitions, of course, is federally related mortgage loan, because that's what RESPA relates to. So remember, with RESPA, you got to have dirt and you've got to have a dwelling. So you're going to have a mortgage or deed of trust on real property on which there is or will be located following the making of the loan, a 1 to 4 family residence. And then there are some qualifications with respect to the lender. Obviously, those who are listening in today are folks who already know that they are subject to RESPA. If you go over to page 7, you see the definition of servicer. And Jack and I were talking before the program and saying, you know, we're afraid that some people who saw the promotional material for the webinar didn't think of themselves as servicers. Obviously, you all know that's what you are, whether you're servicing loans that are made by someone else or servicing those that you've made yourself. The servicer is the person who is receiving the payments, or in the case of a reverse mortgage loan, they're the person who is making the payments to the owner of the property. So the definition of servicing is on page 8, and it means the person who's receiving the scheduled periodic payments, including what they're putting in escrow and making the payments to the owner of the loan, if that's a third party, and on a home equity conversion mortgage or reverse mortgage, it's whoever's making payments to the borrower. Now, we referred earlier to the fact that we had all these informal things that were coming out trying to help us understand RESPA. We had the RESPA Roundup. We had the FAQs from HUD. Well, here, only the things that have gone through the formal rulemaking process are going to be considered a rule, regulation, or interpretation of the Bureau. So you've got everything that's a part of this rulemaking once it gets finalized, and then you have anything in the future that they do, that they go through the Federal Register process and state in it that, okay, this is an interpretation or an interpretive rule, commentary, or statement of policy. So they're tightening that up. They got a lot of criticism before that when they were issuing these informal things, nobody had the same level of notice that you get with a Federal Register document, and they didn't have the formal right to comment and so forth. So, Jack, how about getting into some of the definitions?
All right. Well, let's take a look at page 9. We talk about the scope. The servicing rules are contained in, the section 30 of the regulation, 30 through 30, I don't know. It goes on for quite a few section numbers, but it applies to any mortgage loan. Now, Mary Beth just defined a federally related mortgage loan, and then we have scope rules here where it says it applies to any mortgage loan. Well, that's a separately defined term. If you look at page 10, 1, 2, 3, 4, about 4 boxes down, we have the definition of a mortgage loan. It means any federally related mortgage loan subject to the exemptions, and we didn't replay the exemptions here. There was no real changes to those. You're familiar with the RESPA exemptions as have existed over the years. But also it does not include open-end lines of credit. Open-end lines of credit generally are included under the definition of a federally related mortgage loan, but they are excluded from this definition of mortgage loan. So when we talk about servicing, it's any federally related mortgage loan other than a HELOC, basically. turn back to page 9, we have a few other definitions we look at here. The definition of day, any calendar day, except for your Saturdays, Sundays, and holidays. Hazard insurance, I think we're pretty familiar with that concept, but it includes the full range of different types of hazard policies. We're going to be using the term loss mitigation, hearing quite a bit about explaining to customers their loss mitigation options. Well, a loss mitigation application is when there are options available and the customer has applied